Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Tuesday, June 21st. Great to have you with us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. You can also find the show now. We've started on a few radio affiliates across the country, including AM 1300 KOLY in Mobridge, South Dakota. You can listen to the show every weekday at 2:06 Central Time on many of your local radio stations as well. We're coming back from a 3-day holiday weekend. We've seen a mostly bearish trade here across the board today in the grain sector. Here to run through everything with us, joining us today, Bill Biederman with agmarket.net is here. Bill, great to have you back on, sir. How are you?
Well, it's always more fun on an update, Jesse, but, we got to take the good with the bad and the bad with the good, so it all works out.
It does all work out. Well, not the day I think many folks expected coming back from a 3-day holiday weekend with a lot of bearish pressure here across the board in grains today, Bill. And, surprising considering all the heat we've been seeing across the country, but just a slight change in that weather forecast and a few, cooler temperatures, although more normal, I would say, in that 6 to 10 day forecast seemed to be all it took for some traders, maybe some long positions to get liquidated here today. Just a lot of bearishness in grains on this Tuesday, Bill.
Yeah, and the forecast, like you say, it's mostly just a temperature change in the forecast, but it's a significant temperature change. Most of us going home Friday thought that we'd be coming into a hot and dry forecast, which is not the case. But so a lot cooler, and a lot of these plants are going to be able to fare very well through that with very little drought stress when you've got cooler temps. And it's really not a drought. Of course, we all know that there's been quite a bit of moisture that came through this spring, recharging a lot of those subsoils. So as long as those subsoils are there and you're not heat stressing, we're probably going to have pretty good crops until the next rain comes along. But Jesse, right now, the forecast, I was just looking at the maps that were sent out here. It looks like maybe a 1/2 inch type potential over the next 10 days. And then after that 10-day period is up, they do expect it to warm back up. And we'll have to see if there's any rain with that. But, if we only get a 1/2 inch or less in the next 10 days and we come back in and it's a hot, dry forecast for the 10 to 18-day period out after that, then I think you've got an issue. And, of course, the problem with that is it's going to fall on another 3-day holiday with July 4th. And we've got the June 30th report coming out on acreage and stocks. That's a major. So we've got a lot of big things happening here in the next 3 weeks, and it's going to be pretty exciting.
It's kind of interesting how this is all working now with the new federal holiday that we had yesterday, giving us a 3-day holiday weekend in the middle of what's typically a weather market time period, Bill. And then you mentioned it, the June 30th acreage report coming up here in a few days, then the July 4th holiday. I feel like it kind of creates a very interesting dynamic here in our market trade that traders have to be a little cautious of, it seems like.
Yeah, I think that we've all gotten used to having, and we all complain about having 20-hour-a-day trading starting on Sunday nights. But reality is that does remove some of the volatility of the market because you're always allowed to get into a position if you see things changing. Whereas over that 3-day period, you can't get in. So everybody's chasing that food wagon down the field and you're all behind it the whole time. So it's a little bit creates more volatility when we have these holidays. But looking forward into that June 30th report, obviously the acreage is going to be a really big deal because the argument for having a few more corn acres is pretty strong, or just as strong as less. Now we know that there were less acres up in the northern plains. Like we're guessing about 1.4 million acres less planted in the state of Tennessee, North Dakota. But In the other main Corn Belt states, there is an argument for a couple million more acres. So that would all balance out to about half of a million more acres net corn. And if that's the case, then you've got about you've got a little bit more bushel wiggle room than not. So we have to have that 177 bushel yield just to really get 150 million bushel over pipeline requirements. With that extra acreage, it gives me about 220 million bushel over pipeline requirements. But still, if I just take that yield down to like a 175, which is the second largest yield ever recorded, you're right down to pipeline requirements. So, you know, it feels more psychologically comforting if we have those more acres, but in reality is the whole world is so tight on starch grains that it doesn't really change things a lot. We still got to have that record yield or near record yield. And right now I'd have to say the crop has that potential. We've got the best stands we've had. We've got great color. We've got some dry areas. I don't want to discount that, but you know, most people that we talk to are getting through pretty good.
Bill, you mentioned the Northern Plains, and one more thought on the June 30th report. Do you think the argument can be made that we might have to play a little more wait and see and maybe get a resurvey from USDA? I know they haven't said anything about it yet, but one has to wonder if that may happen.
I'd say the betting odds, it would be easier to bet that they will announce a resurvey than it would to bet on the actual acres number. So to answer your question, I think they will do that. Now, I do believe what they'll find is that most of the acres got planted, but not necessarily to what was intended. So in other words, I do think corn acres were cut back 1.4 million. Personally, my own personal opinion is, based on conversations I've had with some fertilizer and suppliers, we did not see that 2 million acres get planted in the heart of the Corn Belt. That most guys just didn't change their intentions and they just planted what was intended. In which case that would ultimately lean towards, you know, less corn acres in total and even more pressure for record yield. So these are unfortunately things that aren't going to be known to the market for a long time. And the highs could be well behind us before that happens. But let me just throw out one thing, because I know you're restricted on time. We're in a macro picture where the odds of a soft landing, and this is all according to Federal Reserve Bank reports from all around the country, different Federal Reserve banks that I've been reading, it's about a 10% probability that they're going to be able to manage a soft landing. There's about an 80% probability that they've waited too long to intervene and manage the inflation thing, and it will end up being a hard landing, which means in a hard landing, everything in general deflates in price and creates a tough economic environment. That should tell you, oh my gosh, and this isn't just like a 1 year kind of thing. This usually lasts a few years. This should tell me as a farmer that I need to really manage my revenue stream going out about 2 to 3 years. And it's not going to be being bullish. It's going to be deflating. So I need to take advantage of these prices and lock it in. Now, having said that, you have to realize that we've only got like a 2 bushel per acre leeway here to play with, going from massively bullish, anything less than two bushel, anything greater than a 2 bushel loss could create a very volatile move up. I don't want to say the price, but it would be unprecedented. And you don't want to get run over that. And if you wait too long and realize, oh, there's really no bad weather, we're getting rain, we're going to get another couple rains in July and August, crops made, the market's going to be not only top because we do have a large supply, but because of this economic pressure I'm talking about. So you'll miss the boat. So why not get into the middle of the boat where it's the safest? Get about half sold. Cover those sales with some short dated options that don't cost a lot. In case the market does explode, they're offset those sales. You're still in the game. Or go in and buy a bunch of puts, but do something. I don't even think it's a bad idea to be 75 or 80% sold. Most guys won't do that. And if you do that, basically use puts, because you don't want to be committed to a cash contract you can't deliver on. So those are some ideas. But I think that this is a really significant thing. The macro picture is clear. The macro picture is controlled by federal fiscal policy. And the fiscal policy in place is to get inflation back down to 2%. That is not going to happen quickly, and it's not going to happen easily. So heed well to the best advice I ever got in my whole career: trade fiscal policy.
Bill, great stuff. Great analysis on that. I couldn't agree more with you there. I wanted to ask you on the wheat markets today. I know they were the leader to the downside. Do you feel like there was some seasonal harvest pressure thrown in with some of that winter wheat going on right now?
Yeah, I do. I think that there's, also some pretty good evidence that we have seen some demand destruction pretty much across the board on everything. We've seen lower prices of wheat traded in Matif. That did not help. So all of these things are putting pressure on us. I keep hearing that these, from some people, that these yields are coming in poorly, but I don't think they are. I mean, I think there's more good yields coming in than bad yields. Obviously, the market feels that way. And we're, when you're down 50, 60 cents in a day, that's a pretty big, significant, convincing move that the market knows more than I do.
Well, and as I was chatting with you before we went on the air, I saw kind of the windshield view of some of that southern Illinois wheat crop. Didn't look bad to me. It actually looked really good. Question is, what are they getting in Kansas and Oklahoma, et cetera? But I think I'm with you. I think there's some better yields coming out of fields than we are hearing about. You mentioned some of the outside macro picture. I want to talk the energies as well. We've seen crude oil liquidate from 120 to 110 recently, and now we're kind of around that 110, 111, 112 mark here. What is your thoughts with the crude oil market, how that's playing into our ag trade right now as we get to the back half of June, Bill?
Well, I still think it's going to be a significant factor. I mean, we've sold off $10 in the crude market. It feels like a lot more than that, but I mean, the trend is still up, right? And we still have high price crude. And we're going to have high price crude until the production definitely comes in and starts kicking it up. We are seeing some demand destruction already. We're seeing a lot of flights getting shut down. We're seeing a lot of people who are going to be finishing up their vacation plans over the next 4 to 6 weeks. And after that, demand is going to really shut down hard. They're already predicting disposable income to just get put back in the pocket and not be spent as school season starts. And all of these prior spending plans were already made 6 months ago. So they're going ahead with it, but after that, forget it. We're not going to go to a hotel, Betty. We're going to stay in a tent, that kind of thing. So I would be very prepared for these markets topping and working lower, but I don't think the timing is quite right. Certain things could happen to still have a pretty volatile move going into the summer, going into about August. Once we get past that, I don't see a lot of reason for the markets to, including crude oil, to have strength.
Bill, as well, I should ask you too about the livestock trade on the day Tuesday. A fairly strong day led by feeder cattle. Hogs were all right. That fat cattle market kind of mixed. But overall, as you look at the cattle trade, I'd have to think maybe some of that was the cheaper corn prices on the day, but also the stock market rally. We're in the summer grilling season now, full swing. What's your thoughts with the livestock markets here right now?
Yeah, I agree with everything you said, but I'll go a step farther. And I say about 3 weeks ago, we started really seeing some numbers start to lay the foundation for a pretty bull market going into the livestock sector. The livestock is probably one of the last things to go because it takes so long for the production cycle to get hit relative to like when grains get hit. But we all know that, 3 to 4 weeks ago, we saw a lot of cattle going to slaughter based on drought stress related auctions. Those cattle have been finally processed, packaged, and chewed up. So that product is off the shelf now. And we're starting to see the impacts and the reality of, oh my gosh, all those calves went, for calf feeders, and those aren't available anymore. And now we've got better feed margins. Where am I going to get those calves? So I really think that whole industry has a foundation that's very strong, and barring any kind of total economic collapse, which we're not going to get that, but this market could be really fairly firm all the way into October.
Well, when I look at feeder cattle, I mean, upper 170s there. Do you feel like that's a expensive number on feeders right now, Bill?
Well, it's not cheap, but I don't think it's expensive relative to where they'll end up. We did have a gap higher day today, so it'll be interesting to see if they go down and fill that gap. But I do think that once we break out through a neckline, which is right up around 180 and a half on those Octobers, that could be construed as a head and shoulder bottom. And that could project us back up towards contract highs or even higher. So I think there's a lot of potential. I think there's more upside potential than downside, unless there's a black swan that flies into the feed yard.
Well, we'll have to keep our eyes on that for sure. Bill, before we wrap things up today, any final thoughts you have for us? Anything else you want to share? I know you had a lot of great thoughts for our grain producers there earlier in the show. Anything else you want to mention today?
Well, I just think that you need to really keep your eyes focused on this 18-day weather forecast. That's going to be critical. We will trade a lack of rain with heat in double the speed that we traded the cool weather with potential rain this coming week. So there's a lot of money leaving the industry right now because of margin calls in the equity markets. But if you gave them a real reason to come back, they'd be back in here full swing. So really be careful. Make sure you've got options to protect your positions in both ways. And remember that the big fiscal policy is to get inflation to come down, not up. That's bearish to your commodities, but it doesn't have to happen today.
Well, Bill, of course, if producers need some advice, I know they can reach out to you and the team there at agmarket.net very easily, going online, give you guys a phone call, check out the app, a lot of different ways to get in touch, can't they?
Yeah, that's right. We'd be happy to talk to you, or if you just want to sign up, even just to get our free research videos for a few weeks, just go ahead and go to agmarket.net and go to Ag Intel, and there's a sign up place there for you.
Agmarket.net, the one-stop shop to find all the information. With that, Bill Biederman with agmarket.net. Always a pleasure, sir. Thanks for joining us on this Tuesday, and we'll talk again soon.
Okay, thanks, Jesse.
Bill Biederman with agmarket.net. That's going to do it for Market Talk here today on this Tuesday, June 21st. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.